maximize your profitability, your profits. Okay. I'm going to show you. But at the moment, like I said to you, today is active. Okay. We've had, GDP news come in already, higher than expected or worse than expected already here. Goods. We've seen we've got all this red folder news happening today at 1:30. So it's definitely going to be a volatile day, but it might be volatile before the news happens. It's very possible that markets get volatile before the news hits, okay, in preparation for the volatile news, okay. Now, this is what I'm going to show you a few things. So firstly, let's go over here. Close this out. Takes off a lot of bandwidth. Get rid of this. And I'm going to just make this one screen for now. And I'm going to go to, for example, gold. Let me show you a flex, okay? You can do your own research on it. I'm going to show you a flex, okay? I'm going to go to my 1 minute time frame. And remember, this is not necessarily about, oh yeah, the market's going in this direction over the next 3 days. No, this is about, I'm showing you a way in which you can mash money every day based upon getting in and out of the markets quickly. Some people call it scalping, some people call it something else. But are you ready for it? Tell me, yeah, Jay, I'm ready for it. Yeah, let's go. Let's get some energy.
Let's go. Yeah,
ready.
All
Let's go.
So we know that in the morning, the market's going, when we go and grab liquidity, we're looking for a breaker structure manipulation M to go and get in. All right. But what normally happens, as soon as the market starts, London opens, this yellow box opens, the first thing the market does is taps into a manipulation W. Doesn't matter where the W is. The first thing it does is tap into a manipulation W. All right. If you don't believe me, I'm going to show you on multiple pairs. So you're here, you're waiting for the markets to open London, and there is a manipulation W just sitting out of nowhere. It's here. I'm going to show you it. It is here. Can you see it? Can you see it?
I can see it. What time is it as well?
1 minute time frame, doesn't matter. It's just whichever the closest one is where you see the market gravitating to, that's just the little flex I'm showing you. So you can see this little green box that I had highlighted in here. Look at the market. On the lips, this is nothing to do with the liquidity. This is to do with the markets going to get the liquidity first. So it's got some liquidity from this imbalance. It's got some energy from this imbalance here because it needs to close it first. Look, boom, on the lips, and go all the way up into here, or to get the liquidity from there. Here was the liquidity line, and the market came up here, made a breakout structure M, and then there was an entry here in our manipulation M. Okay, this here happens in seconds, very quickly, just taps into this gap here. Let's go and look again. Let's go and see if we can see it anywhere else. Let's go and see if we can see it anywhere else. Let's go and see if we can see it anywhere else. Let's go and look at NAS. Let's just see it on NAS. Because I've seen it in gold and indices, quite excessively. Let's go and have a look. NAS. Okay, have a look here. NAS, I'm on a 1 minute time frame. The market's just opened up here. I'm looking for the closest manipulation M historically. Can you see it? You see it? Yeah, and therefore, even before that market goes and grabs the liquidity of where it really wants to go, that middle section of that manipulation M, have a look. Taps in first, then goes for the liquidity. Yeah, even this one here, NAS hasn't even got down to the point of where it wanted to go for the liquidity, but straight away tapped in on the basis that the market's opening, London's opening here, and it just, for whatever, it just goes and likes to tap into that imbalance of a manipulation. That's just today. That's two. That's gold, and that's NAS. Let's go and look again. So we can track this. Today's Thursday. Who knows? Maybe it's just a Thursday likes to do it. I don't know. All right. I don't know. But let's have a look. GEO30, not so much. I'm looking if I was to look at here. GEO30, not so much to say that straight away when the market. In fact, I'm lying. Can we see the manipulation M? Or W, sorry, in this instance? Right shoulder's ever so slightly smaller than the left shoulder. Have a look. Looking for that middle point of where the market broke. Here, have a look. Let me just move that out of the way. Let me go to my candles. Well, this market didn't quite get all the way down to this middle section, but this wick, based upon this candle, because remember, it's the middle section is the sweet spot. It's the whole candle that breaks that middle structure. The whole candle that breaks that middle structure is the candle. So like I said, I don't even trade GEO30. I'm just showing you on other indices. That could have been an entry, maybe. You'd have got in on that wick. The market's pushed up here first. I'm just showing you randomly. I don't even know. I saw it on, I don't know if I was going to see it on GEO30, but I've seen it straight away. Let's go and look at another one. What else? What other one can we go look at? Gold, NAS, GEO30, DAX, GU. I don't know if let's have a look into GU, because now we're moving off the indices. All right, let's have a look to see whether the same. And this is not the big. This is just showing the different ways and we can get in and out of these markets. All right.
SPX looked interesting. Like there was a lot of movement.
Yeah. So let's go and have a look at SPX then. SPX. 500. Okay, let's go and have a look at the Lukata. All right. All right, let's go have a look at it. So again, look from when this is London Open. I'm looking for the closest manipulation M. Can you see it? Or the M or W, depends wherever you can see, isn't it? So the closest from here is a manipulation M. Obviously, we can look at which way the direction is going, but I'm just showing you this little flex, this little hack. Can you see it? So based upon that, we're in that leg. Obviously, our entry would be like this, with our stop above, wherever that high is, and look. Have a look. That's 4 in a row. I didn't look at SPY. It's 4 in a row. Yeah. Now the whole point is that we are typically, you're still waiting for. The point is you could trade this into what you're waiting for. So imagine that you're waiting for liquidity to go and grab somewhere. You can trade this into it going and grabbing that liquidity, or you could just turn and be like, you know what, this is just a quick 1 to 3 little flex that I take in the morning. Boom. When I see it, the market just taps in and goes. Yeah. I've been watching it. And I've been seeing the data, and it happens time and time again. Let's try and go backwards historically. Let's go back to gold, for example, and let's go historically backwards and see if we can see it, other days. All right. Because I'm just, like I said, guys, I don't hold nothing back from you, look. If I see something, I'll tell you. If you can benefit from it, well, yippee-ki-yay. Yeah. If you don't, it's not something for you, then cool. You're adults here, but I don't hold back on the information. So I've gone back a few days. Let's go back to London Open. Let's see if it happens again. This is me just testing it, just having a look. So I'm here. We're looking gold. Just before the markets open here, can I see any manipulation? M or W? There isn't nothing that stands out here. All right, there isn't nothing that stands out here. I can't say to you before the market. I can see one that stands out. Not on the 1 minute time frame. I can't. Let's see on the 2 minute time frame. I'm just looking before on the 2 minute time frame. Have a look. If this was the time here, look, 654, 655, 658, and I'm looking, who can see the closest? Because look, this market would have already been here. You can see the closest manipulation structure. Well, I can, and it's here. Am I lying? Can you see it?
Yeah, G.
Yep.
All right. So on that basis there, we may get a tap in here. Hasn't grabbed liquidity yet. We haven't waited for the liquidity to be taken. But we might get an entry here, which is that break point, but it's the whole candle. If you really want to go there, it's always the whole, if there's a candle there, let's go to candles. Well, there's lots of little candles in there, but from the line chart, let's go and tap in right there. Let's place our stop below the lows of the wicks. Have a look. And these ain't ones I made earlier. I'm just randomly, I just went back a certain amount of days, and there you go. Let's go and have a look again. Yeah, let's go and have a look again. Maybe it's just a fluke. Maybe that 5 in a row is just a fluke. I don't know. Let's go and have a look to see if there's another one. So I'm here, I'm looking at the markets. In this instance here, the market is just opened up here. And I'm looking, where is the closest manipulation structure? Well, look, we can see this one here on London Open, and this definitely didn't play out. The market came and pushed up into here, but I'm looking and, you know, oh, sorry. Let's go to the 1 minute. I'm on a 2 minute for some reason. All right, so that might be wrong, because on the 1 minute, it definitely looks a bit more tasty. We've done this one already. Let's go back to the 1 minute. See if we can get 6 out of 6. Yeah, let's see if we can get 6 out of 6 based upon this little flex, this little hack. Well, look, I was hoping that in here I would be able to see it. All right, in here. Now let me tell you something. It is here. Okay, it is here, but for whatever reason, in this instance, it's on a smaller time frame. So let me try and see it. 652. I'm not going to say this is one, all right, because I haven't told man about smaller time frame. But watch, 652 on the 7th of August. Hopefully it can give us the data. Well, not quite a manipulation. Let me see the wicks. Not quite a manipulation W. All right. So maybe we can take this one as an L. All right, because I'm reaching by going down to a smaller time frame. Let's go and look at the 15-second time frame real quick. Closer to a manipulation W, but not quite there. But once again, though, even though we're not quite there, it's not even like a major L, because it's still, we see it soon as London opens. Soon as London opens, this tapping to any imbalance, any manipulation W. This one, like I said to you, for whatever reason, maybe it's Owanda's candles, I don't know. Maybe I'm going to look on another pair and it is exactly what it is. But we see this tapping. Yeah, look at the tapping, and I said it's the whole candle. Remember, whatever the candle that breaks the structure, that one candle, it's that whole candle. All right, so even though that one wasn't perfect, we weren't far off perfect. Yeah, because we would have been sitting here waiting for this structure, this market to come and take liquidity. Yeah, probably from above here. Take the liquidity, which it does, and then we'll be waiting for a manipulation breaker structure over here, which it did, and we'll be looking to tap in here for the sell, which it came back in, and it did. I'm showing you guys another flex of being able to get into that push into it, going and grabbing the liquidity. And we've just done 6 in a row, and I'd say we got 5.5 out of 6, because this one here still happened with this fast push in the 1 minute time frame. It just didn't give us see what we needed to see in here. Cool, no problem. I'll take 5.5 out of 6. Let's keep going back. I'm gonna go back to the next day. So this is before. This is New York evening, PM, New York AM. This is London again. Let's have a look here. This might be a little bit different because here we might have to go back in time over here because unfortunately the way the structure is, we're looking at the market here as the market's open, and I'm looking here. I'm going to inquire over here. I'm making an inquiry right there. All right, that is 3:55 on the 24th of August. No, sorry. That is 3:55 on the 5th of August. I'm showing you guys the flex. Yeah, I'm showing you guys stuff same time as I'm seeing it. I'm giving you the, what happened there? What happened there? What did I do wrong? 5th August 3:55. Oh, sorry, was it 15:55? What's going on? What's happened there?
Motion detected at your front door.
What has just happened? What just happened there? 5th of August at 3:50. Oh, sorry, it is showing me. So I'm investigating here. All right, let's zoom in. Well, you know, something's going on here with this little manipulation W. So let's do this. Sorry, guys, if that was in your ear. Let's do that little line over here. Let's look at the candles. Let's place a stop. There's a line over here. And let's see if when that market opened, I'm going in this direction. Delicious. Now, guys, I shit you not, I have not been here all morning, you know, planning this and looking for cherry picking times when it happens. Yeah, I mean, look at that. Bearing in mind, we would have been here and we would have seen. Did it just come? This is a bit different because it came and it grabbed the liquidity anyway, but we would have waited to see potentially a manipulation W here first to see if it's going to tap back in. And in this instance, it didn't even tap back in. All right. Didn't even tap back in on this instance. All right. This is gold. This is gold. This isn't even like any kind of pair. This is gold. And everyone wants to trade gold. So this is a potential strategy. This is potentially something that can be used to very, very quickly catch a lot of profits. A lot of this is you're going to be done in within an hour, and you're going to catch some serious profits. Where are you going to take in that trade to? Well, I'd say take it to structure. That's what I'd say. At least take it to structure. At least protect yourself. At least take. But look, that is a massive trade. Even with that range here, that trade is a massive trade that happened. First thing in the morning at 7 a.m. Got all the way up to here. This is a 1 to 10 trade. 1 to 10 trade to here, to structure. 1 to 14 to above structure. And if you had the balls to just hold on to that, well, 1 to 14, I was going to say the balls to do anything. 1 to 14 you got up to. But let's just say 1 to 10. Quickly, let's go back. I'm going to try one more. But the further I go back though, the more difficult it is to get the data. So what was we looking at the other one? Let's look at US 30. See if we can see on US 30. Let's see. Don't take my word for it. We're back testing. We're checking it together. Let's see. Yeah. Let us see. Let us see what going on. So this was this morning here. US 30 looking horrible than what these candles are looking at that. I'm looking for the closest. If I was looking back here, for the closest manipulation W where it can tap in, or M where it can tap. I think, tell you what, we need to obviously also have a handle of which direction the market's going. I think it's needed. All right, so this is a bullish market. We've got bullish over here. Cool. Let's see whether or not it's the same this morning. I would say I think I'm gonna add something to the flex. Let me check something. Okay, so I would say, look, here would have been the closest manipulation W. That we did see the market tap in here, but it pushed up in here and then fell in here. So this one didn't work. All right, but what I'm thinking that we need is I'm thinking the way I've seen it happen. Just look at some of the other successful ones that we took. That happened is no, that'd be a lie. I was going to say from within the key kill zones of the previous session, but that would be a lie. But at the same time, I don't like this. This market's a little bit sketchy in here anyway. A little bit sketchy in here. Well, we'll say that one's wrong. Or maybe we say US 30 doesn't like it. Maybe we'll just check it with, let's go back to gold. Let's check it again. Maybe this is just a gold phenomenon. Actually, it was gold. And what was the other one we looked at? NAS, right? Let's go and have a look at NAS. I'm just telling you something that I've seen. Whilst I've been sitting there waiting for these markets to go and sweep the liquidity, I keep seeing it. Like how comes it just tapped in there and I've seen it and I've seen it again and I've seen it again? I've thinking to myself, wait a minute. Is this unique, or does this happen? Is this happening across the board with other pairs also? You know, where we're first tapping in. We're first tapping in. Let's have a look. Here, can't really see too much in here. This is London Open. Am I on a minute time frame? Can't really see too much in here of this market tapping in. As in, I can't see now. It's very sketchy. If anything here, but we already got a tap in before London opened. That was on NAS. Was that today? Was it NAS today that I said? Oh yeah, sorry. Let's scoot back and see what's going on. Let's see. Let us say tapped in nicely. Some nice displacement there on that manipulation M. You see what I was talking about when I say the displacement? Have a look what I mean. Is that candle here, see? One big candle that causes imbalance. If I was to rewind this, one big candle that causes imbalance that breaks the middle section of the structure. Nice displacement. Yeah? Did I spell it right? I don't know. I don't think there's an E in there. Or am I going mad? It's probably like that, right? All right, so either way, as soon as I see that, I'm just looking for that tap in, yo. That's the tap in. I'm in. My stop above the highs. See? All right. So we've gone looking and back testing it definitely on gold. We've been seeing it. NAS, we've been seeing it. And, is these markets going to do it every single time? Well, it looks like they're doing it more times out of 10. I'll tell you that much. Okay? I'll tell you that much. And let's see whether or not it also happens on any other, on New York opens. Let's check. Let's check to see if when New York opens, the first thing this market wants to do is tap in. Well, we can see the obvious here, made a manipulation W and then tapped in. Wasn't quite straight as it opened up. Had a little energy first. All right. but made a manipulation W right there, and then tapped in. Yeah, and then tapped in. Let's have a look. Now we still trade in market structure. I'm just looking at this in between, understanding market structure, price action, understanding the liquidity, and just seeing that this phenomenon that keeps happening. Let's go and see whether or not it's happened again. Let's go backwards in time. Let's see. Now I'm no longer looking at London. I'm now looking at New York. So I'm looking for a blue box, which is going to be New York. All right, and we're back testing our ideas. You know. 1 minute time frame. This is New York thingy session, AM session. Looking for the closest. Nothing too clean, in my opinion. On the 1 minute. Maybe New York likes 2 minute time frames. Who knows? We're just testing. I'm not telling you guys anything. I'm just testing. I'm having a look for myself. All right. This is PM. Yeah, this is the PM session. I'm not looking at that yet. Well, look. New York obviously seems a bit different. Seems that it makes that manipulation within the session. I've just seen it twice. We'll keep looking. Boom, 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 boom. With big displacement. So I'm interested at this point here, where that imbalances, that middle section, to stop above the highs. Let's go and have a look again. New York seems to make it within the session. All right, we've been looking for the first one outside of the session in London, but New York seems to be a bit different. You see New York make a manipulation in here within the session. Didn't tap in, just left. This one just left the party. Oh, wait, I'm lying. So I'm on a 2 minute time frame. Let's go back on a 1 minute time frame. We want to start from the 1 minute. And I've seen in certain instances where we've seen very fast price action, we've had to go even lower, or I've had to go even lower than the 1 minute to search for what I'm looking for. All right. Yeah, we can see in here that sorry, this is the AM session over here, that the market made that's in the session. Beautiful little manipulation breaker structure M right at the top of that mountain. Did it tap in? I don't know. I'm going to check in a minute, drum roll. If it tapped in, I'm going to stretch it out, because remember, these markets can do these things fast. All right. I don't think it tapped in, no, especially with all of this wick stuff happening. Yeah, but then again, one could say it did tap in. It tapped in, very complex, not easy to catch. Okay, very complex, not easy to catch. What do I mean by that? I mean, look, this from here up into here, down to this wick, up to this wick, and down with this push here, all completed that manipulation M. Now the line chart doesn't take into consideration the wicks, but the wicks then gives me a target, because I'm looking for any imbalance, yeah, at the point of where it broke, right? So even if I wanted to get really thing in here, look, I'm looking at any imbalance at the point it broke from. So that's in here. That's this little area in here. Okay. Let me make that bright color. Let's have a look. We tap in. We do tap in. You see? Now, this is what I'm saying to you. Like, every single time, this market is not going to give us, textbook opportunities. you know. But we're trying to look for like an excuse to pull the trigger. That's essentially what we're doing. We're trying to look for an excuse, a reason to get into trades, and a reason not to get into trades, because we don't want to be taking absolutely everything. Okay, but the reality is, if we've got these set of rules, we've got to search for those set of rules for the opportunity to pull the trigger. We want to get involved. That's the whole point of us trading. We want to take trades. We don't just look at the screen all day long, because we're not going to make any money just from staring at the screen. All right, but you know, we have to search for what we're searching for. Yeah, and ultimately, even in this instance, when I thought to myself we didn't tap in, if I really want to go there, we did tap in. But yeah, it wasn't a huge displacement, it wasn't fantastic, but this candle completed the M as part of this leg, and that area here, you know, had some displacement in there, and that candle immediately tapped in, yeah, and then left the party. Not how I'd like to see it. I would have liked to see this one candle here being a big candle breaking that middle section. But like I said to you, this one's not necessarily textbook. All right, let's go and have a quick glimpse back at our GP. It's something to look at, guys. It's something to look at, something for you to back test, something for you to look at. It's not like, you know, we're trying to find our little hacks, our little flexes, our little playbooks of what we can turn and be like, yeah, this is something that I do on this market, and crushes. And if you've seen it happen enough times and you're taking the trade and it's made you money, well, by all means, keep doing that, bro. Keep doing that. My man tells me, yeah, I trade this, I trade that, I trade a smart money concept. You say, listen, let me tell you something. At London Open, I look for the first breaker structure manipulation W and I hit the button. And 8 times out of 10 it works. Or 6 times out of 10 it works. If that's your flex, that's your flex. You don't have to be on some, yeah, I divide it by 2 and then I square root the SMC and then I times it by 9. It's not that. It's like, that's not what the aim of this game is. It's not who's thinks they're the most clever, who's got the most complicated strategies, who can pull money out of these markets. It's so funny. You hear some of these guys on the podcast, and the guys that are supposedly making the most dough, and you ask them their strategy, you know what they say? They go, "Yeah, I just kind of trade supply and demand. I don't really know about all this SMC stuff and this, that, and the third and red tear. I kind of like, if you actually will deep, because I remember I watch these things all day. You guys know I watch them, I let them play in the background to take in the information subconsciously and to hear certain things. And most of these guys, I'm talking about the guys that are out here saying, yeah, I trade for a fund and I've currently got, 8 figures under management. And they ask them straight strategy. Man says, I trade market structure. I trade key levels. I trade supply and demand. Man ain't out here saying, yeah, I've got this indicator that does this, it divides it by 2, it does that, and then when this happens, the algorithm does something else. Them man are not saying that. And I honestly think all that overcomplication of certain things is kind of just like a fence that people build up around their strategies to make it seem as though they're just brighter than everybody else. So I personally think. I think most things in life are simple and best kept simple. Yeah. So like I said to you, for us, our strategy is simple. Wake up in the morning, go out to your larger time frame, understand what the market's doing overall. Okay, cool. Yeah. Then you want to understand that we've got different plays, and we understand the market moves towards liquidity, and liquidity is the fuel of the market. So identify what that liquidity is. When you see that liquidity taken, you're looking for a manipulation break of structure, meaning that the right shoulder is longer than the left shoulder. And you're looking for displacement. You're looking for the market's price to move away from that level with strength and speed. All right, looking for it to move away from that area with strength and speed. And once you see that happen, that you see strength and speed with a manipulation breaker structure, MOW, you're waiting for price to return. Oh, this is what I said I was going to show you guys. All right. Okay. So I told you what I'm going to show you. Cool. I'll show you. I don't know, should I show you? I should keep that for my advanced strategies now. I'm giving away too much sauce, I was going to say that I was going to show you how you scale in to that entry. I suppose I should hold something back. I got to keep something for myself. I'll tell you what, here we go. I'm going to tell you guys off of camera. Yeah. I'm going to finish the session, then I'll quickly tell you. It's quite straightforward. It's not that complicated, but it's a way in which you can double your your potential returns. It does increase your, it doesn't, without increasing your risk. Let me even say that. Without increasing your risk. So you can still keep your risk at the same 1% and be able to quite quickly have a way in which you can scale into position. Now, let's say, for example, here, this GU. Let's quickly analyze this, all right? So this was Asian session, and this market started pushing up. This is Asian, well, this whole thing was Asian session over here, but this is the little key. There we are, Asian session. Then you start going into, you know, Frankfurt is at 6 o'clock, etc. And then London started here. All right. Now, let's go and get a bit smaller. London started here at 7 o'clock. Now, straight away, we've identified liquidity, liquidity, liquidity. Liquidity down here. Because remember, this session wants to take from another session. But also, you know, there's liquidity below all of these little lows. Don't get twisted. Now, we know that this today, have a look. We know that today is going to be active, yeah, with a H. Okay, see that activity that's happening at 1:30? This activity could most definitely be a catalyst to have this market come and do this. Nam, 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 nam. Even if it wants to go down, or vice versa, go nam, 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 even if it wants to go up before going down. Because right now, markets have opened London, and we're kind of in the middle of these two supermarkets. Up here, there's, you know, Asda, and down here is Tesco's. And I'm like, boy, before we do something, we need to go and buy some drinks, guys. This could definitely happen. Both of these scenarios could happen. So I'm aware of that. I'm also aware of the bigger picture, like I said to you, our strategies, understanding what the overall Russian doll market structure is of this market. I need to know that. Yes, even though we can get in and out of these markets in no time. Yes, we can get in and out of these markets in absolutely no time. So let me get off the wrong pair, because I don't know why FXCM shows me a completely different market structure to everything else. It's quite strange. I definitely need to ask them why, you know, their markets are different. But have a look here. Let's delete everything here. It's very strange. FXCM shows us that something else. And I'm lying. Sorry, I'm lying. FXCM gives us more data going back to 1971. Sorry, I was just murdering FXCM. I'll take it back, because the data going back to 1971 was showing this structure on a bigger picture different. So I know this bigger Russian doll is like this, that we're right in a premium of this bigger Russian doll, however you want to see it. I need to know that. That doesn't mean that I can just sell, hit the button, because this is a monthly chart. The market can keep going up for 1 month and still not break this structure. So I need to understand what we're doing in a shorter time frame, which is what the strategies that I've been teaching you guys about, being able to get in and out of the market as a day trader today, based upon liquidity. Because liquidity is the fuel of the market. And as mentioned, we can see here London session liquidity pairing up with, you know, even a previous New York session liquidity. Yeah, so when I put that in there, I've got my little labeling that I've saved over here, liquidity. All right, I can also see some more liquidity sitting above a previous Asian session over here. And I can see another level over here, which is a previous New York session, New York PM session, liquidity, liquidity, liquidity. Then I can see liquidity below. Yeah. Previous Asian session and, you know, a previous New York session. And I can also see a very close liquidity. Everything's sitting within this previous New York session. Oh, here. I also understand the concept of previous battlegrounds, you know, areas where the market's broken through and sat on top and then moved away, as in previous resistance becoming previous support. Yeah. So I can mark those things out also. But now this is setting, that's at least setting some sort of guidelines to what's going on. This market here, you know, has had a reaction to a big manipulation M sitting in here. Yeah, that big manipulation M that was sitting in here, which had some, you know, I would have liked to see this bigger candle, but let's have a look at the half hour for argument's sake. No. All right, but we had a little reaction in here that tapped into the imbalance that was sitting in here. Tapped into this imbalance, It's had a little reaction in here. Is it the reaction? Well, no, because it hasn't grabbed any liquidity yet. It's just moving around, grabbing imbalance, fixing imbalances, inefficiencies, you know, just doing what it does. So right now, this is the scene. What I would do is I'd put some alerts, at least on the first line here, an alert crossing up. I'd put an alert here, crossing down. And at 1:30 or before 1:30, if the market starts to do stuff beforehand, then I'm going to see Hog One. Have a look at our gold. Finally decided to not stop me out and start going in the right direction. Now, I said to you this morning, I was 1,600 up within minutes in gold and in GU. And I didn't look at the news at this point in time, see how active today was. And the market, I thought it was going to run. I thought I caught a perfect entry. And the market was going to run and run and run. All right. However, it's for whatever reason kicked back on me and came back, and GU stopped me out anyway. And gold started far-arsing about for a little while. All right. So have a look at gold far-arsing about for a little while. Look, it's been far-arsing about for a little while. Like, what's it doing? Like, but over this line here, can you see this dotted line was where liquidity was taken previously? And it was far-arsing on that line. In my opinion, anything below this line, you know, should be sells. I want to see this close below here, to be fair. You know, it should sell off. I wanted it to get to at least to this green line previously. All right, let me clean this chart and I'm going to quickly break this down and then we're going to finish up. All right, I do have a meeting today. Let's go to our daily time frame and see what's going on. Gold's definitely a bullish market. We know this. All right, gold is bullish. We know multiple reasons why gold is bullish. All right, because maybe we didn't know prior to this, to joining Unity and getting into the markets, but we understand now that gold is a safe haven asset. We've seen documentaries, you know. Don't think it's a coincidence. Let me show you something and get deeper for you. Don't think it's a coincidence that all of a sudden now there's gold documentaries talk it on Netflix. Let me say that one more time. Don't think it's a coincidence when certain things are happening, coordinated with media, etc. They're trying to let everybody know that gold's a good place to put your money. Safe haven asset. Don't listen to the Saudis. Like, let's stay here. It's gold. It's this. It's that. And other. Like, forget. Like, it's a read that. Don't think that Idris Elba just did the documentary just now. And the same time he finished doing it, they just released it. It's like information. It's like information on entertainers. Yeah, you got dirt on an entertainer. You don't need to release it all now. No, we just sit on it. And all of a sudden, when something happens and, you know, shit's flying, all of a sudden, left, right, and center stories start appearing about Diddy and this person and that person, this person. We think that just happened just now. Don't be so naive. Like, man, we just sit on the information. Yeah. So, you know, gold we know is bullish. And if you want to look at it like this, that the market has been trading up within that yellow range. Zoom all the way up. Within that yellow range, the market's been trading up. And we are at, you know, you might as well say all-time highs. Yeah. The market is at all-time highs. It's at a level right now where it previously was at all-time high. We're at all-time highs in this market, kind of roundabout here. You know, it's a bit difficult to see, but around about here, we're talking all-time. We make it smaller, you know, highs in this kind of area here. But, you know, let's zoom down because that's not going to help us. We can't just say, okay, cool, we're going to keep buying right now because the market's bullish. Because the market could decide to come back down to this yellow line. Don't get twisted. From here to down here in gold is a massive move. Yeah, you're not going to be able to be, your stop loss is going to be below there. It's impossible. Not impossible, but it's unlikely. Okay, let's have a look. Let's have a look at the look. All right, so we can see here that the market has been making higher highs and higher lows and higher highs and higher lows and higher highs and higher lows and higher highs. So if we wanted to, we could draw a line from this data point touching the last low before the highest point, the last low before the highest point, okay, to just try and give us some sort of bearing of Wagwan. Now, if we want to zoom in some more, because I'm on a daily, which is still massive, the market has kind of been doing the hokey cokey from here. Look, this is all market structure. This is being able to read market structure. Okay? What did this ain't got nothing to do with whether you're going to take a trade this morning and get in and out of the market. Just so you know. This is just giving you that overall picture. And we can see that right here that, you know, we're in a real premium, yeah, of this purple box, which was over here. Probably this point here was previous all-time high. You know, July, yeah, all-time high. And from that all-time high, we fell, we broke structure, indicated, corrected, continued, but decided that we want to consolidate. We didn't decide to keep coming down here, decided we wanted to consolidate. So it came back up here, broke structure again, and we was like, okay, we're going back up, and then it came back down here and broke some minor structure again. So we're consolidating. So therefore, right now up here, we're in a premium. We're in a premium of this consolidation box. Yeah, because don't get twisted, though we are consolidating, this is still a massive, massive range if you could trade it. Let's go down to our hour time frame. Let's have a look. Our hour time frame, we start to see how we're in that consolidation. We start to see structure. Yeah, start to see the market making higher highs and higher lows and higher highs and higher lows and coming up to this premium again, you know, right up against it, and then thinking about it like, are we going to go and make new higher highs? Have we got it all clear? Looking over his shoulder to the boss, to the powers that be. Have we got it all clear to make a higher high? And then like, nah, not yet. Not yet. So from that level, we've seen the markets break structure, boom, indicate, correct, back to, you know, where the breaker structure is. And, you know, I'm thinking to myself, based upon that, there's a possibility this is going to happen. All right. So we zoom in, and now we can start going into our understanding of what is moving the market and where the market's going and what it wants to do next, etc. Because we can see over here, for argument's sake, that there is a big breaker structure manipulation M up here. So don't get it twisted. If this market wanted to, maybe this market could decide to push up into these levels on a smaller time frame. I don't know. Possible. Yeah. We're also looking at here, understanding liquidity, and seeing that here, look, previous liquidity over here was all the way up here, you know, above these previous levels over here. Liquidity in gold all the way up here. So this market decides to make a run. It could make a run all the way up here, up into this premium, and then go from here, because that's where there's some previous liquidity of this previous New York, London session. Sorry, okay. But prior to that, this morning we was here. Let's zoom in some more. And we can see here, might be difficult to see, was a previous level here, liquidity. This was a New York session in here. So if I was to label these, liquidity and liquidity. Yeah, we saw the market capture some of that liquidity. Have a look. Yeah, can you see this little wick here? So now I'm going to change this liquidity here to a different label that I have, which is liquidity taken, and it's a dotted line, because that little wick there took some liquidity. Let's have a look at it on a 5-minute time frame. Let's have a look at it on a 1-minute time frame, because we're interested in getting in and out of these markets today. And this is the reason why I'm in gold, because the market took the liquidity and it created, somebody tell me, finish my sentence. Finish
displacement.
Displacement, but what am I going for from before the displacement?
A manipulation.
Exactly. And my rules are, I wait for liquidity to be taken. I've got a reason why the market might be coming down here, a narrative, after indicating, correcting, and potentially continuing. And I've seen this indication, I've seen this manipulation M. I watched it, and then I waited for the market to return, especially as this one had lovely displacement, with a big candle breaking that middle section of the M. Have a look. Middle section of the M's in there. This is the middle section of the M, obviously with the wicks involved. It's down here. And therefore, this is my entry. No, I might be wrong. It might just go and stop me out, but this is my rules. This is the game I'm playing. I've got my rules. I've got my reasons to get in. And I'm just hoping that I was just hoping this market was just going to fall off a cliff and keep going. But maybe because of today, of all the news and other stuff, I said to you that the market's been fraffing about. When it was coming down here, I was like, yeah, this is looking fantastic. Nice, big, long, strong, bearish candles. And then we got here for some reason, and then we started ramping. And then I checked the news, which I should have done wrong, the other way around. Yeah. And I was like, okay, active day today. And the market's been ramping. But this is, I have no issues if I get stopped out of this trade. Zero issues. Because that's my rules. And I'm in profit now. And I could just close out right now and take the $700. All right. But I'm watching it because I really want it to get outside. And I want this London session, after taking that liquidity over here of the previous, after taking the liquidity of, okay, wait a minute. Because the liquidity was taken from this little level in here. Okay, sorry, which was a level inside this session, which is, why did I see that differently just a minute ago? I placed it in a different place. I think I was looking at it on an hour. Let's just fix that real quick. It still took the liquidity from above that level, but why did I somehow make a mistake and think that was the London session? That's a bit strange because it's showing at me on a larger time frame. Let's have a look here. All right, so let me add this in here as well. The liquidity from above this session is actually over here. And this might be the reason why we're dancing around. This is the reason, regardless of why I've protected my position. Okay, protecting my positions and a little bit of my profits. So I've got two positions in there. So I'm making sure that they're both risk-free. And this market might decide to come up here and actually take the liquidity over London. I identified this area here as liquidity level because from here we saw this push that broke previous structure. So there was liquidity there, and it's why we had a reaction to that. But it might not be the reaction. We had a reaction. It might not be the reaction. All right. Especially as I've just seen that the liquidity from that London session hasn't actually been captured. So we've had a reaction, retracement, but it might not be the reaction to start coming and breaking structure and start coming down here. That might happen after we get this news, and we might see this happen. Look, nam, 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 nam. Maybe. So my position is protected. I'm not going to lose any money. But I saw this little area here where we took some liquidity over there, and that's the reason why I got in. But in hindsight now, it's not I don't believe it may be the move. All right. So all these markets are setting up and waiting to see what happens with this news today, it seems. Be vigilant, keep an eye on it. Anyone want to say anything about what's going on today? I hope you enjoyed the session.
Yeah, grand rising all. As you can see, it's been a bit of a busy week in regards to red folder news. A lot of GBP news. Positive today in regards to the economy. That should push the pound higher. Today's retail sales for the USA. That's going to be an important data point to see how the retail is doing, i.e. us, general public. Are we spending money? That's a good indicator if economy is doing very well or not. Yeah, so watch out for that at 1:30. That's going to be very, very a very, very important data point for the Fed. Future of kind of an analysis is that the Fed most likely will cut in September, and this data point will provide them with more evidence to do so. Any questions, anybody? Sorry, it's a quick one.
No, good, man. It's good information. Definitely watching it, and I can definitely see how the market's maybe even setting up. But yeah, keep an eye on these markets, guys. I've shown you a couple little things today. Or in fact, I'm going to show you quickly, guys, for the people that are on YouTube. Do like, share, subscribe, etc. I'm going to show these guys a little source of how they can double up their position and scale in effectively. All right, but let me just stop.